Okay, Amber, it looks like we are live, large and in charge as always on a Wednesday. How are you?
Good. How are you doing?
Good. Happy Wednesday. Is it Wednesday? It is Wednesday.
It's
Day
a
after,
Wednesday that feels like a Monday.
it feels like a Monday because it's the day after the 4th of July. How was
Uh-huh.
your holiday?
It was good. How about yours? It was
It
nice
was
and relaxing.
low key, baby, low key. I normally
Uh-huh.
like go out and party it up, but not this year. I decided to stay home. I made some carne asada tacos and hung out with my son and my friend Jake, and we just chilled out and did our thing. But it was really,
Oh,
really
that's awesome.
nice. You know, from my vantage point, we got to see a lot of the fireworks around town. And then, of course, the sphere lit up for the first time ever last night, which was really, 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 really cool. So
Could you see that from your place?
yes, and then I watched a live stream on YouTube just to see like what it was looking like, and it just looks freaking otherworldly. It honestly looks
It looks
like a spaceship.
amazing.
It's incredible. So super exciting. So happy 4th, happy Independence Day, you know, to everybody watching as well as to you. For those of you just tuning in, I'm here with my amazing friend Amber Coleman. She is one of the top 200 lenders in the entire nation for a reason. I only work with the best, and I'm pretty sure she only works with the best too. But I'm just super excited today, Amber, because you know we have a tendency to get a lot of really great questions from our clients and from people who are reaching out through the YouTube channel, asking kind of just point blank questions. Yo, if I were to do this loan, what would my payment be? If I was going to do this loan, what would my payment be? And a
Mhm.
lot of times, and I'm hoping you can help me explain this, a lot of times in your world, in the lending side, it's really difficult to explain immediately with like one question what your rate and what you're going to get for your payment is going to be unless it's a certain kind of loan. Can you walk me through why it's so difficult to kind of quote that right off the bat?
Well, okay, because most loans are very much based off of your individual FICO score. Some of them even have debt ratio requirements, that like loan limits. So if you're going above a certain loan limit, you might have to go to a different type of loan. So they
Right.
have different requirements on them.
Right.
And so
So
that's why it's easier
it's
if I pull everything so I could see what your FICO score is, what your debt
yeah.
ratio is, especially if you need a grant or something like that.
Yeah.
What your FICO score is, what your debt ratio is, how much in assets you have. And then I can kind of pull together, okay, here's what programs you qualify for, and here's what the payments look like.
I sometimes think of it like you have like stuff flying at you. You're just like, I don't know, I don't know, because there's so many little factors that change. So today, though, we decided to talk about FHA loans. First of all, it's the most popular loan out there right now. Am I
Mhm.
right about that, or am I making that up?
No, really, in this market, it's the most popular loan. In the market of COVID, people try to stay away from it, but in this
Right.
one, it's the most popular. I can explain why too, why
Yeah, let's
everybody's
hear it.
liking it.
Yeah.
So, I mean, so FHA, when you do an FHA loan, one of the big things right now is any loan that's being done right now, the market kind of understands that it's a future refinance, right?
Hmm.
Like we're going to be refinancing this at some point. So FHA loans, when you refinance them, there's no appraisal, there's no checking for jobs, there's not very many verifications on the refinance, and you could just streamline into a lower rate, which is
Hmm.
I think why they're being looked at a little bit more now than
Hmm.
conventional. Plus, they just lowered their rates are a little bit lower, and their mortgage insurance dropped at the beginning of the year, so that's why they're a little bit more popular right now.
So, and it's usually a popular loan too, because there's people, you know, there's still that misconception out there that people think you have to bring 20% down to to buy a house. Like I even had a phone call about an hour ago with someone who said, "Yeah, so we haven't quite saved the full 20% yet. We think we'll be ready by next year." And I was like, "Why are you trying to get? Is there a reason you want to do 20%?" And they were like, "Yeah, isn't that what you have to have to buy a home?" And I'm like, "Oh my god!" Like,
Uh,
P.S. Anybody watching this, you do not need 20% down to purchase a home. In fact, the reason that I believe FHA loans are so popular as well is because it only requires 3.5% down, which we're going to talk about. Now, you can put more down, and of course, that's great, and that helps bring your payment down, but you do not have to save 20% to buy a home. So that's really exciting. I
And
don't know
just
why
so
that's
you
such
know,
a
too, hardly anybody puts 20% down unless they have a house to sell and then they're rolling that money in.
yeah, that's a
The
good point.
the lower down payment loans, FHA conventional, they're the most popular loans that are out there. So don't
Yes,
feel like you need to wait for
absolutely.
20%.
Good. Okay. So today I thought it would be fun for us to try to take some basic loan amounts, a 350, 450, and maybe the top of the line when it comes to FHA, and actually walk everybody who's watching through a rate sheet that walks them through what their payment might look like. Now, I'm going to caveat this by saying it is very important for you to understand watching this, and I'm going to put it at the bottom. In fact, I'm going to do it right now. So you guys can't say we didn't tell you. When you're listening to us talk about rates, it's just today. That's just today, and your situation might be different. But these are some really cool kind of tentpole guidelines for you to keep an eye on so that you can understand what you might be able to expect when you're buying a home, and also just kind of where things are right now. How do you feel about that, Amber?
I feel good. Let's do it. This is
All
the
right.
first time we've done this, so it's kind of
I know.
exciting.
I'm really, really exciting. Now I'm gonna put that away for a minute. But guys, if you're watching this and you have specific questions, or even if you have questions about anything, Las Vegas, moving to Vegas, real estate, who does my hair, whatever you want to know, just drop it like it's hot in the comment box below. If you want to get in touch with us, we also have a pinned comment in the description as well, pinned comment as well as in the description as our information. Please click the link. Please call us, text us anytime. We want to be here for you. You don't need to be ready to buy to call us. We don't care if you're buying now or 10 years from now. We're ready to help you. Okay, now I'm going to add this back to the screen. So Amber, let's start with the basics here. $350,000 purchase price. Walk me through this rate sheet and how should I be thinking about this as a buyer?
Okay, so this is a typical fee worksheet that we'll send out when you're like wanting to get estimates on what you're looking for. So at 350,000, let me break it down starting from the top so it makes more sense. So we have the $350,000 sales price. Well, first they have it on an FHA loan. That way you know the loan program. 350,000 sales price. You have a down payment, and I'll explain how their mortgage insurance works. So the loan amount we're looking at is $343,600. Then we estimated your loan cost plus taxes and other fees. That's on there. So here's where FHA gets a little bit confusing, where I have to explain this to people all the time, is FHA has mortgage insurance that's added onto the top of added onto your loan amount, and they have monthly mortgage insurance. So your loan costs look high on an FHA, but then there's a subtraction where it says closing costs financed in $5,910. So that actually offsets that mortgage insurance. Does that make sense?
Got it. Yeah, that makes sense. So if you see a negative or I guess a negative number here, just know that that's a credit towards you. That's offsetting anything that you might have had to put out there on the top line, that first number up above. The other thing I wanted to caveat this with, Amber, is FHA loans are pretty standard across the board for some of these fees that we're talking about if you're above a 620 FICO score. Is that right?
Yeah, so FHA gives the same interest rate for 620 and above FICO scores. So the rate that we're looking at on this sheet is today's interest rate at 6.650 with a 620 or above FICO score. If it goes below that, then the rate's going to be higher.
Right. And then your payment would go up a little bit, right?
And then your payment would go up a little bit. And just keep in mind, rates fluctuate sometimes by the hour. Today's market's been a bit crazy today. So they fluctuate all the time. That's why we're saying this is the rates right now, but that doesn't mean that it's the rates tomorrow. Like last week, I saw one day where they hit like 6.125. So it just depends on like what day you're looking at. The interest rates. We're just showing today's interest rates as of this hour.
So if you're 620 or above, which would be ideal, you can qualify for FHA. But good news for you, if you're someone who's just struggling, you've had life happen. We've all had life happen, right, Amber? We both have had our hits on our credit. You can go down to a 540 or a 580.
So you can go down to a 540 if you want to put 10% down. You can go down to a 580 with 3.5% down.
So same program down to 580 credit score, with exception to your rate's going to be a little bit higher. So just wanted to caveat that so everybody watching understands what we're looking at here is not exactly what you're going to pay, but it's pretty dang close if you have that 620 or above score, right? And if it was today that you were going to lock in your rate and everything was dialed in, right?
Yep.
All right. So 350, if you're buying a $350,000 house, you're going to put 3.5% down. This also doesn't take into account that maybe the seller might give you some money towards closing costs. Maybe there's going to be a credit from whoever, wherever, whatever, right? There's all kinds of caveats that could make this come down. What if I qualified for a grant and I was able to get grant money? That grant money would come in and come off the top as well. So all of that being said, this is with no additional fun stuff, which we're always going to look for, always going to try to help you find. $2,581.49 is your purchase price if you bought today's rates at $350 purchase price, right?
Yeah, absolutely. But let me break it down for you a little bit on here since we kind of went through the closing costs. So then FHA is 3.5% down payment. So on this one, you could see that section where it says down payment $12,250. That's
Yep.
the down payment. If the seller can always pay closing costs, you can always get a gift for closing costs or even the down payment, and you can get grants on top of that too.
Right.
So
Right.
then if you go to the next section where it talks about rate,
Hmm.
it talks about APR too. So we always have to list APR in every form because that includes cost, mortgage insurance, everything, and kind of wraps it into one interest rate.
Hmm.
Um, and then you're with the payment, you're always going to see a breakdown. So principal and interest, you're at $2,249. That's just principal and interest. Then you always want to add on taxes, insurance, and mortgage insurance because you're always going to have that on your loan. So
Right.
homeowners insurance, we're just estimating at 60. Keep in mind, I'm throwing a complete estimate on there. Sometimes I get them down to 20. Sometimes they come out at 120, depending on the house and depending on as
Right.
when you're qualifying for insurance. Then we have mortgage insurance. That's FHA's mortgage insurance. That's they don't adjust their mortgage insurance. So it adjusts with it's as far as the percentage, it adjusts with your purchase price.
Hmm.
And then the taxes, we're estimating those too. Keep in mind, the older the house, the lower the taxes. The newer the house, the higher the taxes.
Yeah.
So I've
And we're
kind of
gonna
just
be we're
pulled
gonna
something in
be
the middle.
Yeah, we're going to be doing some videos talking about that. So just stay tuned. We're going to be doing some really awesome videos that'll talk to you about the difference with buying a brand new home versus a resale. There's a lot of things that people don't take into account that we hope that you guys will be able to learn from.
Mhm.
But bottom line, Amber, again, without grants, without any seller credits, which we would of course try to fight for, without anything that's outside giving you an awesome gift, this is what you're going to look at if you want to buy a $350,000 house in Las Vegas. Can I talk today? I can't talk today.
No, you're
For
doing
20
great.
so the other thing I want to say is, as you mentioned early on, FHA, a lot of times they're going to be refinanced, right? Once your house gains a little bit of equity
Mhm.
or the rates go down or something, whatever, there's going to be a reason for you to refinance. So when you do refinance, most of the time, you're going to be able to get rid of that mortgage insurance. Am I right, Amber?
Well, if you refinance on a conventional loan, so when you
Yeah,
go to refinance, if you go FHA to FHA, you're still going to have mortgage insurance on there, but
right.
it'll be if you're doing a refinance, you're doing it for a cheaper rate. If you go
Yes.
FHA to conventional, that's when you could get rid of the mortgage insurance as long as you have 20% equity in the
Got it.
house.
Awesome. And so we can
Mhm.
always work with you on that. Amber's really great about sending out updates. I'm going to put this away for just a second. Amber's really great about sending out updates to you guys. Once you purchase a home with her team, once a
Yeah.
month you're getting an email saying, "Hey, your house could be valued about this based on the market." Hey, your house. So it's really great because that keeps you in the know. That's when you call us and go, "Hey, is this right? Is this accurate?" Because it's going to be aggregate data, but it does really get pretty close sometimes. And I love that you guys have that home bot thing that you guys send out because it really keeps our homeowners invested and tied into the value that they're putting into their own pocket every time they make that payment instead of making it to another landlord, not themselves, right?
Yes, exactly. HomeBot is awesome because after you own a house too, it not only gives you the value of what your house is going to be, but if you decide to rent it, then there's a section on there here saying here's the average rent for your house. If you decide to
Look at that.
do nightly rentals or something like that, I mean, even though there's more laws and stuff but it'll give you all that information. So
Yes.
it is pretty awesome after you close on a house.
I love it. All right, Amber, let's go to the next one. Let's give some more scenarios here. Let's talk about 400,000. Again, I know this is probably just standard. People can do the math moving up, but I think it helps for people to see the actual numbers in front of their face.
Yeah, so 400,000, your down payment on that, if we go down to the down payment is $14,000. And
Right.
then remember the reason why the $400,000 sales price and the loan amount of 392 doesn't add up is because you have your down payment on it and then it adds that upfront mortgage insurance to the loan amount. So
Right.
392, 755 is what you actually finance. And
Hmm.
then at the same interest rate at 6.625, which is in this hour today's rate. But
Now,
like I
again,
said,
it could go
rates
down. It could go down before 5 p.m. It could go up next Monday. It could be a sneeze, and then all of a sudden it goes up and then down within an hour. So it does
it,
change by the minute.
it literally is a sneeze. If the feds do anything, they sneeze and the rates move.
Yeah.
So it's
Yep.
literally a sneeze. So the payment on $400,000 with a $14,000 down payment is
No
2,000.
grants, no seller credits. I want to reiterate that this is not taking into account if you qualify for grants or if we get you seller credits in the negotiations, right?
Yeah. Because that all changes everything. We're just giving raw numbers right here. We're always an advocate to try to see if we can get you money from anywhere we can get it for, depending
Yep.
on your qualifications. So just kind of keep that in mind.
Yes.
But to break down the payment at the very bottom of the screen, it shows the principal and interest at $2,514.85. And
Mm-hmm.
then we've estimated insurance at $60. Mortgage insurance is at $176. And then we've estimated property taxes at $200. So your total payment is highlighted in yellow at $2,950.85 for a
Now, again,
$400,000 house.
if the rates drop down, that payment and everything goes with it, right? So keep that in mind, and that's why interest rates and staying locked in with us and not waiting for the market to get better and not waiting for the Fed to tell us what we're doing. That's why staying in touch with us and talking to us almost as often as you'd like about what you should do about your rate. When is it time to shop? When is it time to lock my rate? Is so important. Amber's team has their finger on the pulse. I get what do we talk 6 times a day, maybe 8 times a day? I don't even know.
Something like that. I mean,
I
we
do
should
love
start
having such
keeping
a smart
track,
best friend. I know. I do love having such a smart best friend. Because the rates are up. Oh, okay. I didn't know. I should tell my clients. But it does really help us that you eat, sleep, and do everything else. I'm not going to say the right word. You eat, sleep, and live the rates. So her team being so on top of these rates is super helpful because it's going to help you know when it's time to lock, so that you're not going to be, thinking that your payment's going to be 2,500. And then by the time we close your loan, it's now $3,000. And you're like, crap, I don't make enough money for that. Right.
Yeah.
You guys have to stay in lockstep with her and staying in lockstep with us during that loan closing process for sure.
Yeah,
Amber,
definitely.
let's talk about the most popular price point right now. The median home price for Las Vegas, for the Valley of Las Vegas, is right around that 450 mark, or somewhere between 430 and 460. So this is right in the middle where everyone seems to be spending money right now. Again, without any seller credits, without any grants, with the bare minimum of 3.5% down. Let's walk through these numbers.
Okay, so $450,000 purchase price. Again, we're going to look at the down payment of $15,750. And again, the reason why the loan amount doesn't add up is because you take the down payment and add the upfront mortgage insurance, which is that closing cost financed in is $7,599. I know that probably confused, but I just wanted to explain how we got there. And then with the rate today, this hour, right now, 6.625, you're looking at a principal and interest payment of $2,829.21. Hazard insurance, which is homeowners insurance. So like if your house catches on fire, gets broken into, that kind of insurance.
Yep.
You're required to have that on the house. We estimate that at 60. Mortgage insurance is estimated at 198. Mortgage insurance is what you have on a loan if you're putting down less than 20% on the house.
Yep.
And then the taxes are estimated at 250. Keep in mind, the older the house, the cheaper the taxes. The newer the house, the more expensive the taxes. So we're coming right in the middle with that. So
it's on the assessed value. It's on the assessed value of the home, and that's why the assessed value, as the home gets older, the assessed value is kind of assessed differently, assessed less. Brand new homes are going to be exactly what you're paying, right?
Yeah. Yep. So then in yellow, the total payments highlighted at $3,337.21.
Right.
At the $450,000.
Now, let's talk a little bit about closing costs, Amber. A lot of people think all they have to have, and again, sometimes this can be covered by the seller, sometimes these can be covered by grants, but if I don't have any of those extra things that are helping me out and I want to buy a home, a lot of times people think I just need 3.5% down. But the reality is either we need to find you a grant or the seller needs to pay, or you'll need to come cash to close to close the home and be purchasing it with about $26,000 on this one. Am I correct?
Yeah, that if you're not able to get any seller credits, and I guess it depends on how popular the house is, right? If you want a house that everybody's wanting and there's so many offers on it, a lot of people are willing to sacrifice and pay the closing costs. So then you have to beat those people out. Right. So like if the seller's not able to pay any money and you're not able to get a grant for one reason or another, then on a $450,000 house, we're looking at, $26,572 is what the estimated cost would be.
Right. Now, keep in mind, so within closing costs, there's a lot of different factors, and we didn't detail those out here today. We can certainly answer those questions as you guys ask them. But within closing costs, Amber, give me a rundown of some of the costs that people are going to need to understand are going to be wrapped up in that number, that $10,000.
So how I figure it is basically anybody that touches your loan has a fee on there. So there's going to be like,
Except for me, we don't touch
except
your
for
loan.
Laci, but you're not touching the loan. You're just helping, you're
Yep.
helping them with the house, right? Which is the
Yep.
most fun thing to do.
Yes.
So like there's a title company involved. You're going to have, there's an escrow company involved. There's title fees, there's escrow fees, there's insurances for your title to keep your title protected. There's homeowners insurance that they're going to require upfront payment on. There's taxes that are required upfront payment on. There's HOA fees that are required upfront payment on. If you buy down your rate and you have to pay any points, then those points are within your closing costs. There's an underwriter, there's a processor, there's an appraiser that all has fees on there too. So basically anybody that has to go, because when you're doing a loan, there's several processes you have to go through in order to get it, and to make sure that the value is good, to basically keep everybody honest. I mean, that's what an appraiser is there to do, is to keep the seller honest, to make sure you're buying the house at fair market value, right?
I just want to point out, so first of all, there's like 1,000 people that touch that loan before it gets through to the end, which I think is awesome. A lot of people assume that, lending still looks like it did back in 2008. Even 2008, there were a lot of people that touched the loan, but there's that many layers and that many stopgaps and that many people to make sure that nothing is fraudulent, that everybody's on the up and up, that your documents look clean, that there's not going to be a problem later with not only you being able to make the payment, but also you being approved, right? So it's on both sides. But beyond that, I think what's biggest misconception is that people, especially buyers, sellers, different story, but buyers, they assume that we cost money. We as the realtors are a big cost to them. The only thing that our team at least costs is a flat $695 fee that gets rolled into those closing costs. And that doesn't even come to me or my team. That goes straight to our broker for compliance fees and for some of the stuff that they have to do with your file on our side too. Beyond that though, a lot of people assume, like a lot of people don't call us. I've had people call me. I just thought I'd call. I figure I can't afford you, but I figure I'd call anyway. And I'm like, what do you mean you can't afford me? Are you buying? Yeah, I'm buying. Can you afford a $695 fee? Yes, then you can afford me. That's all we get paid from your side of things, right? So a lot of people just assume because of the house buying process, they think that they're paying like a seller would. That's not how that works. Our fees as realtors are paid by the seller of the home, whether it be a builder or the person who's selling it. And it's already pre-negotiated before you walk through the door. So lots and lots of things that get confused. But that closing fee does incorporate like 1,000 other people, just not our team.
It does.
Just not
and I want to say something about that, because I see, I see loans all over the place. So there's some agents out there that will charge additional commissions to their clients and not even tell them about it till it gets to closing. So I'm like, wait, we got 1% extra on here. You can't do that. You got to tell people about it. So there's a lot of times you'll get hit with that kind of stuff. So that $695 fee you have is very low compared to what some other people do.
Thank you. We really do try to be affordable, and that isn't even a fee that we receive. It goes straight above us to our broker who we hang our license with, who makes sure that we're within compliance and that we're acting within the law. So I just wanted to touch on that briefly, because those closing costs are not only something that people forget about, they don't realize that's a part of the process, but they also don't seem to understand, what the hell am I paying for anyway? So it's your team's fees, it's the insurance stuff, it's all up and down the line, but none of it has to do with the real estate people themselves, like the people who are helping you find the home. Our team, the real estate team itself, does not get paid by you, with the exception of the $695 fee. So I think that's really important.
Yeah, thanks for sharing.
All right, let's go to the top of this lending model. Let's go to the top, Amber. Okay. Let's go to so what is the limit? If you could please share, what is the limit on an FHA loan? The most I can borrow.
So the most you can borrow with putting 3.5% down is 510. And the reason why is because the max loan amount on FHA is 492 and change. I should know the change, but I never do. So I just say 492 and change, because it changes every year. So
I love that.
But so 510,000 with putting 3.5% down puts you at that loan limit. Now, when you're looking at this form, you're going to say, wait, Amber, the loan limit's 500,000. But remember, it's the 492 is the base loan amount, and then they add the mortgage insurance on top of that. The upfront mortgage insurance. So this one has a down payment of $17,850, and then your same rate 6.625. Your principal and interest payment on it would be $3,206.43. Mortgage or homeowners insurance, again, that's if your house catches on fire, breaks down, something like, or not breaks down, house catches on fire, somebody breaks into it, like the theft insurance that's on that. So we're
Yeah.
estimating $60 a month. Mortgage insurance is $224 a month. And then your taxes, we're estimating at 300. Again, we're kind of taking in the middle, because the lower the house, or the older the house, the cheaper the taxes, the newer the house, the more expensive the taxes. So
Yes, ma'am.
your total payment on this is $3,790.43 at the
And
top
again,
limit of FHA.
top limit, so you can buy a $510,000 home. This is what you're, again, as of today, today's rates, all the, no seller credits, no grants, none of the stuff that would love to make sure that we could try to take advantage of for you. This is the bare bones. As of this moment, as of this hour today, this is what the rates are going to be looking like. This was super helpful for me. I'm wondering if it was for our followers and for the people who watch our channel. So if you've been watching this long, first of all, thanks for tuning in as always. I'm going to pop over to the comment section, Amber, and see if we can answer some of these questions that are coming through.
Let's do it.
Just want to remind you as well, please, drop it like it's hot. If you guys want to talk to us, drop it like it's hot. Click that link in the description. Drop that information. We want to learn who you are. Or you can text me. There's my phone number right at the bottom. It is me. You will talk to me personally. Let's go. With that being said, there's quite a few people who are often wondering, Amber, is FHA just for first-time home buyers? And lo and behold, Martin Givens. Hi, Martin. Good to speak with you again. I think I just spoke with Martin on the phone possibly last week. Martin wants to know, is FHA just for first-time home buyers?
Hi, Martin. No, it's not. But you know what? I get asked that question all the time. And I think it's because FHA is sometimes attached to the first-time homebuyer grants. So you do FHA plus a grant, but you don't have to be a first-time home buyer to do FHA. You just have to fit under their FHA loan limits and obviously qualify for the loan. But this could be your fifth time using FHA. The only caveat to FHA is you can't have two FHA loans at the same time unless you're living in one and you're a non-occupying co-borrower in the other one. So we have done that quite a bit too.
Yes, we have. Good question, Martin. Thank you so much for asking. Oscar Love says, the internet is a wonderful thing. I'm sitting at the doctor's office with my dad watching you ladies. Hey, Oscar. Always good to see you, buddy. Lady B. Oh, I just spoke with Renee on the phone. She says, this is very helpful to see. Happy to be working with you too, Renee. Hey, Renee. We just both spoke to Renee today, I think. I think we both chatted with her today.
Yes, excited to work with you.
So if you are still watching and you have questions about any kind of loan, anything related to real estate, anything related to Las Vegas, if you want to know what I'm up to this weekend, I don't know. I'm just trying to give you guys the free reign to ask anything you want. We're going to stay on for a few minutes longer and make sure we can answer your questions. The bottom line, though, is for those of you who are watching, a lot of people get scared by seeing the rate, the number. That's my payment. Oh, my God. Here's the thing I want you to keep in mind, and something that I think will keep hope alive. Those are some larger payments, more than I've seen in a long time. And I want to be very honest about that. Like, I personally would have a hard time making a $3,300 payment per month. With that being said, however, that's just this hour of today. It could go down next week. It probably will go down. We don't know. What we do know, though, is that the prices are not going down. We've definitely seen a lot of listings and people start to try to just get rid of the home because they see that there's, it's a weird market. It's not really something that we've seen, but the values of the home have not gone down. Our appraisers are still valuing the homes at what we were seeing 6 months ago, 7, 8 months ago. So that's a big difference that I want to make sure you guys tune into. A lot of people call me and say, oh, I'm seeing things are crashing in Las Vegas. Zillow showed me this one house I've been watching is now dropped their price, $75,000. Now's the time to buy. You guys have to understand what that is and what's really happening. You know as well as I do, Amber, what a lot of sellers are going out there right now, greedy and wanting to get that extra money, which good for them, but their agents are not advising them that they have to still be within the market price point. And so those homes are sitting and they're sitting. And then they're dropping the price a little bit, and then they're sitting, and they're dropping the price. And then it looks like a wounded animal on the side of the road that nobody wants to pick up and help, right? Because they're not sure if it's rabbit or not, right? So reality is that, I know that was a great, horrible metaphor, but here I am, analogies galore. But with that being said, a lot of people get scared at those numbers, but please, please, please know, those numbers that we shared with you today don't have grants. You might qualify for a grant. You might. Don't have any.
Let's look at it.
Yeah. If you put more down, like you don't do 3.5% down, you were lucky enough to save, or you got a bonus, or you got a gift from a relative or whatever. You put a little bit more down, that payment comes down, right? If you want to buy your points down, that's okay too. If you qualify for our 1% program, which is one of our most popular videos we've ever put out, that is an amazing program that allows you to still do this 3%, a 3% down, not 3.5%, 3% down. You're bringing 1% to the table. Guild Mortgage is coming to the rest with the rest, those other 2%, plus a bunch of other stuff. So there's a lot of different programs that we can slice and dice for you. This is not the end all be all. This was for us just an opportunity to really educate you on how we look at things, how many varying factors there are up and down that sheet, all the different awesome variables that are going to work in your favor when you work with Amber and you work with me, because we're going to want to fight for the gold and get you everything you deserve, right? So don't let what we shared scare you. Don't let that payment scare you. Please know those were the bare bones, and those were based off of a high rate day. Let's just be honest. We chose the wrong day to do this thing, but I still think it's good.
It is a high, but it's good to see the breakdown. And what you were saying about buy downs, this market is really good for buy downs. So in the past, maybe we should do that one day too. Like in the past, it used to be for 1% that you would pay in costs and additional costs, you get 0.25% in rate. So if rate was at 6.625 today, you get 6.375. But lately it's been a lot more than that. So lately it's been more worth it to be able to do buy downs than I've ever seen before. So like when we're looking at rates, let's just go down the rate sheet. Okay, if you pay this, here's what you get. If you pay this, here's what you get based on today. Oh, look at our little cutie.
He wants to be on camera. Hi, Baxter. Come here, say hi to everybody. Hi, guys. Hi.
Baxter.
Hi.
Baxter.
Sorry, he loves to distract, and he's jealous that I'm giving you my attention. Buddy, go lay down. Anyway, agreed. To your point, like we're seeing so much movement and so much variation in all of what a lot of people have it stuck in their brain. This one time they looked at a rate sheet, this one time they tried to qualify, that one time my mom bought her house. None of that applies here, guys. These are it's a wild, wild west. Let's just put it out there. There's tumbleweeds flying across the road. I'm seeing, like high noon showdowns. It is the wild, wild west right now. And
your analogies crack me up.
You definitely need to know that don't hold on to past information. Call us. And when I say call us, I mean, call me. Like literally my phone number is on the bottom of the screen, or you can take a moment and click the link in the description or the pinned comment. Happy to set up a phone call with you, but it's going to be me on the other side of it. In fact, I just got a text message from someone who's watching it, whoever that was. Hello, I'll reply to you in a minute. See, thank you for listening. All right, we got a few more questions. Here we go. Greg Smith says, hey, gals, if you put 20% down, does that eliminate the mortgage insurance? Amber's awesome. Can't wait to meet Laci. Hello from Julia. Hey, Julia. Thank you, Greg and Julia.
Yay.
You, what do you say? What do you say, Amber? Does it take away mortgage insurance?
If you're doing a conventional loan, it does. So if you qualify for conventional, and a lot of times you will if you have 20% down, just depending on your credit and stuff like that. But so conventional loans, when you're putting 20% down, it does take away mortgage insurance. FHA, however, does not. So you always have mortgage insurance on an FHA loan, no matter how much you put down on it.
Okay. So if I were to come to you and say, here's all my information, I want to put 20% down, you are going to likely talk that client into doing a different loan that's going to be better for them and yield them a better whatever, right?
Well, I'm going to go through both options with you. So I'll give you, because it all depends on FICO score. So remember, conventional charges higher rates depending on if your FICO score is anywhere under 720. So if your credit score is a little bit lower than that, then even mortgage insurance on FHA might be better on payment. Depending on where your FICO score is. So I'll run both options for you, and then you can decide which one would be better,
awesome.
to do.
Awesome. Here's another really good question from our friend Renee. Hey, Renee, if you're able to get grants to help with fees and costs, would you be able to qualify for a higher loan? Not sure if that makes sense. Good question.
Yeah. Okay. So if you're able to get grants to help with fees and costs.
So I guess the question really is if you're getting grants and things to cover fees, the fees are likely going to be closing costs, right? Or down payment. They can be applied in different places depending, correct?
It can be applied to down payment. It could be applied to closing costs. On the grants, it all depends on the debt to income ratio. So some grants are going to hold you to a 45% debt to income ratio. So we have to look and see what your debts are compared to your income, and then stay within that 45%. Some will allow you to go up to 50%. And then there's some out there that as long as they get an approval in the automated system, you can go with it. So it depends on the grant, and all of them have different rules too. Some of them won't allow you to put down more money down on them. Some of them will. So it depends on the grants
It's
to
really
answer
going to
that question
depend.
too.
Yeah. And I
Mhm.
think also like typically it's not going to be applied towards the loan balance. It's really applied to the additional fees involved. So qualifying for more money would require you to continue to still come with the same amount, but maybe applying that in a different way that maybe could inch you up a little bit further. I
Mhm.
think this is why I don't do loans. I'm not good at math. But I definitely understand that. But it's the answer to that question, Renee, is that it depends. Really does depend.
Yeah.
Oh, Mark Frieda says, "Hey, Laci, you must have quite a collection of earrings. You always wear nice, different ones. Thanks for noticing my earrings. These are made from a local vendor. I don't know which one. I should probably know that name off the top of my head, but thank you. I always try to give my money to local small businesses here or small businesses around the world that I love, and they're usually earrings. I'm usually buying earrings.
They're
I do have
super cute.
I have such a collection that I have tackle boxes in my drawer filled with earrings that are all parceled apart. And yeah, you don't want to see my process here. But thanks, Mark. Thanks for noticing. I appreciate it.
That was
See,
my next question. How do you store all those? Like, where do you
yeah,
put them? Tackle boxes. That's a new one.
literally tackle boxes. Yeah, it's a hot mess. Yeah. So it's actually very organized, not a hot mess, but I'm
I was
sort of a
gonna
hot
say
mess.
that sounds organized.
So like I said, we're here to answer all of your pressing questions here about the things that happen here in Las Vegas, whether it be my earrings or where we're going to dinner tonight or the freaking loan that we're talking about today, which is the FHA loan. So I want to just say thank you to Amber. I know it took you a bit of time to put together some of those scenarios today. Really think it's going to help our clients get a better understanding of for FHA loans specifically, knowing that it's just today's rate, just this hour's rate,
Mhm.
that's sort of the breakdown of how costs work. And that I'm hoping that this will give you guys hope to reach out. Don't be scared by the numbers that you saw in the yellow. The yellow number is representative of no extra fluff. It's just boom, bare bones. We got a lot of fluff. We like the gray. We like the fluff. We like to add a little zhuzh. We're from Vegas, baby. We got neon everywhere. So give us a call. Let's see if we can add some fluff to your loan. See if we can make it look a little bit better. But this is just one type of loan of many, 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 many,
Yeah.
many, many, many loans. I did get quite a few people, Amber, in the last 2 weeks reach out to us regarding that 1% down program loan, which is incredible. I just want to touch on that again. If you haven't seen that loan program yet, please go back to my channel, go to the live section and rewatch that video. That video about that loan was extremely popular for a reason. Amber, how many people have you been able to kind of put into that program over the last couple of weeks?
Well, we're still working on getting everybody qualified for it, but it's been super fun with talking to everybody and running through all the numbers with it. I mean, it's a fun program and it offers so much. Like that
Yeah.
additional like 1% for the first year, 1% lower than the regular rate for the first year is huge. It saves you hundreds of dollars in the month. So
Yep.
I
So
haven't calculated how many I've put into it, but I'll have that answer for you
well,
next time.
I think I sent you close to 40 people to talk to. So thank you to everyone who's reached out, maybe less. I don't know. I'm maybe exaggerating, but there was a lot. I did a lot of phone calls in the last couple of weeks. And I'm just so grateful because I do think it's giving people hope. The other thing I wanted to say, Amber, is thank you to you as well as everybody watching. One of the biggest comments I've received I'd say in the last 15 days, just the last 15 days specifically, although we hear this a lot, but it's been really concentrated. And I think this concentration has to do with the negativity in the news, the rates being all over the place, there being an uncertainty out there about what's going to happen with the world and jobs and just inflation and all of that. But this one comment has really been sticking me pretty hard, right in the throat, making me a little verklempt every time I hear it. And I've heard it from, I'd say at least 70% of the people that have reached out, they've said, you give me hope. Your videos
I
gave me
love
hope.
it.
I once thought I
Aw.
could only be a renter. And once I watched your videos, it made me believe that maybe I could be a homeowner too. We are giving hope to people, which I didn't think we were doing on purpose, but it is part of our core values as a
Yeah.
crew. And it is how we lead our business and how we lead our lives. So just want to reiterate one more time, in case you haven't gotten that message of hope, here it is for you. You can be a homeowner. I don't care what your situation is. It may take longer than you think. It's not going to happen overnight. It could happen overnight. Regardless, everyone should have the opportunity to work towards being able to buy a home. The dream of home ownership is real. We believe in it wholeheartedly. We want this message to come straight through to you. If you know someone who's a renter who just doesn't think it's for them, doesn't even want to bother, or they're embarrassed, which is a lot of why people don't reach out. They're concerned about their credit. They don't want to be judged. They don't want to admit that they don't make this much money or that much money, that everyone thinks something differently. I just want to let you know, this is a judge-free zone. We both have had credit problems. I currently am working through credit problems right now from my divorce. Like, we're very, very transparent. We want to let you know You are worthy of owning a home too. And we want this hope message to come streaming through today. If you know somebody who needs to hear this message, please share this video with them or share any of our videos, because that is our goal here, is to make sure that that message continues to ring true and that we see more and more of you call. Number one, because I need friends, clearly. So call. And then beyond that, let us become a part of your journey, get us involved in what you're doing, and let us see if we can help you along the way.
You just gave me all the warm and fuzzies inside. Thank you, Laci.
A little sometimes myself, but seriously, I mean,
honestly,
yeah.
We have had our own problems in the past, and I feel like helping other people through them is maybe paying it forward a little bit. Like
that's a amen to that, sister. Amen, for sure. Before we sign off, we got a couple of additional comments here. One of them says, Phil Mill says, "Hey, Laci and Amber, good to see you both." Thank you, Phil.
Hey, Phil.
Good question comes from LD. Is FHA loan mortgage monthly payments higher than a bank loan?
Than a bank? Well, FHA, we're going through a bank to get an FHA loan. So,
right.
So most of the time when you're looking at FHA is a government funded loan. So when you're looking at something that's government funded, you're actually looking at a better program than you are looking at something that's privately funded. So if you're looking at a bank loan that's going to be privately funded, private funded loans are going to be higher rates because they got to pay somebody back, versus an FHA where you have the government backing it with taxpayer money and stuff like that. So usually you're going to get a better rate, better payment, everything by doing a government back loan than you would like a loan from a private money bank.
Right. I think too, I've had a lot of people call me and say, first of all, thank you for that question, LD. A lot of people call and say, I don't know. I don't need to talk to Amber. I'm just going to talk to my Chase, my bank. I'm going to go to Bank of America or Wells Fargo because I've been with them for 30 years and they're going to give me a better deal. And listen, I want you to be able to look at all options. However, I'm going to guarantee every single person that I've ever sold a home to that has gone to their bank has ended up either regretting going to their bank later or gone to you after the fact or another lender after the fact, because not only are the banks, national banks especially, not well suited to run a loan and get it done on time and make sure that you don't lose your earnest money because they're behind on their deadlines. Number one, they're not suited or set up to really work in the timelines that we need. They're not familiar with our local market, which is key, right? Very much key. They're not looking at all kinds of variation programs. They're not thinking outside the box like Amber. They have the 4 loans that they provide, and these are the 4 that they're allowed to provide. And because you've been with them this long, they'll give you this lending rate and da-da-da-da. And that's great. If that works for you, awesome. But I've seen so much success with people who started that way, realized the error of their ways, and decided to talk to someone like you, Amber, who has access to thousands of loans, thousands of different slice and dice it, and also who is willing to think outside the box, who does genuinely care and hang your hat on the absolute end game of making sure that you get done. Your job depends on it. My job depends on it. A banker is not dependent on whether or not you get into your home. They're going to go take their 15-day vacation and not pass you off to someone else. They're not going to necessarily think outside the box. I'm not saying you shouldn't try it, but I've seen, I think almost exactly 100% of the people that I've done that with on my personal experiences have not been happy about it.
No, yeah. Thanks for mentioning that too. I think a lot of it is because I don't get paid unless you close.
That's right.
So it's a matter of like, not only that, we want to help you be able to get through the process too and be able to get you, because it is paying it forward. Like we said earlier, we've had our problems, but also like when we're talking to someone who's making an hourly rate, they could care less whether you close or not.
Yep.
It makes a difference.
Not their priority. Yeah. And so from a payment perspective, I know that you'll probably see a difference because there's going to be I believe from the programs that you offer, a lot more variety and a lot more options to really help you with that. But beyond that, I mean, the experience alone is paramount. So let's do one more from LD. Will interest rates ever go down anytime soon? That's the question of the day.
We pray they do. Come on.
That's an hourly prayer, honestly. So much an hourly prayer that we did those estimates for today, the ones that look like, let me just show you in case you're just tuning in, the ones that showed us this, right? We did these estimates today, and I got to tell you, we were both like, oh man, we're working with some high rates today. This is going to scare people, but we did it anyway because I think we were able to hopefully express to you guys that rate is of the hour. It does not mean that's your rate. And we want to make sure that you know that this is just kind of how things are worked through and how things are thought about. We want to educate you guys so that you don't feel like you're so reliant, and you also ask better questions and you put us to test, right?
Yes, absolutely.
Amber, I am so grateful for you. I want to once again tell you guys, if you guys are thinking about working with any lender in the nation, Amber is the one that I would go through. Amber, what states are you currently approved to practice and do business in?
So and thank you so much, Laci. I'm always happy to work with you too. Laci is the best, honestly. Like I send my family, my friends, everybody to Mrs. Laci. So,
Thank you.
okay, so I'm currently licensed in Nevada, Utah. I have to look up to remember Nevada, Utah, Idaho, and Oklahoma. I know that's kind of a
And
weird
your
one, right?
team is qualified
But
where?
my team is also, we split it up a little bit for education purposes, but my team's licensed also in Arizona, California, Montana, and I feel like I'm missing one, but
Washington?
no, Washington we're working on. Washington
Okay,
and Oregon, we're working on those.
perfect. Here's what I'll tell you. If you're thinking about buying a house anywhere, or you change your mind about Vegas and you're looking somewhere else, which talk to me. I don't know why you would do that. But anyway,
Yeah.
if you do that, let us know because Amber can probably help you there as well. Also, if you're looking at refinancing and you currently own a home or refinancing before you move to Vegas and keeping that home, call us. Amber can probably help you there as well. It depends. And I've also seen Amber get licensed just to help one of our clients in some of these states. Now, this is extra work for her, extra money for her, extra education on an annual basis to do so, but I have seen her do it. So, nothing's off the table, ladies and gentlemen. Give us a call, right?
We keep everything on the table. Yep.
That's
We're
right.
here to help.
I want to say thank you to everybody tuning in. We had a really good crowd today. I'm looking at the numbers continue to go up and down. This is awesome. If you're thinking about moving to Vegas, I need to know about it today. I want to know today. I don't want to know tomorrow. I don't want to know next week. I want to know today. And that's only because I don't care if you're moving now or 10 years from now. I want to be part of your journey. I want to be your friend. A lot of you guys are thinking about moving in 10 years, but you're still coming to visit. We're missing out on friend time, my friends. We're missing out on high fives and me keeping you up to date on what's going on in the market. Amber is not as social as me. She gets stuck behind that desk. She's very social, but she gets chained
I
behind
need
that
to
desk.
get out from the desk more often. Let me know when you guys are in town.
Yeah. So please tune in. Please text us. The number is scrolling at the bottom, or you can simply click the link in the description or the pinned comment. We are here to help you. We want to help you get hope. We want to help you think about owning a home. And if you just decide to rent and don't end up buying with us anyway, that's okay too. Reach out. We want to talk to you. All right. It's over. It's over, Johnny. It's done. We're talking.
I love the New York accent. Come on.
All right. I think we should wrap it up, Amber. I hope you had a beautiful holiday. So grateful for you. So happy that we were able to do this today. I wasn't sure. It was holiday week, but we made it happen.
We did it. Woohoo. I know. I hope you
All
had a
right.
good holiday as well. Had some good relaxation in there.
Yeah,
Miss Laci has a hard time sleeping. She's always working.
I'm always working. I'm heading into a staycation. So if anyone is in town this week, I will be hanging out at the Cosmopolitan. Come and say hi. I would love to see you, or text me on the phone number on the screen and I'll say hi to you while I'm down on the strip because there are a lot of people still here over the weekend. So I guess that's it, Amber. Thanks again for tuning in. Thank you to everybody. We're really, really excited and grateful. We want to hear from you. Let's go. You can buy a home. Now is the time.
You got this.
Don't wait for the prices to go up. All right. We'll figure it out. All right. We'll talk.